Welcome to Markets Now. I'm Michelle Rourke with DuWayne Bosse of Bolt Marketing. Well, a higher day in the grains and live cattle futures. We were mixed in feeders and hogs. Okay, DuWayne, let's talk about the grain trade first of all. Everything higher. Was it just short covering? Was it just technical action, you think?
I think it was a lot of short covering, probably led by the commitment as traders report. That was shown that the funds had sold corn 100,000 contracts the week prior. So now they're obviously short this market, quite a bit short. So I think whenever you get a report like that on a Friday, you get a little bit of a bounce back on Monday. I think that had something to do with it. But I do like the way it went into the close. I mean, a little bit of a rally into the close. And plus, it's really hard to rally this market with all the rains we've got falling over this week in the Midwest.
We did have a sharply lower US dollar index, though, so that probably helped, didn't it?
That always helps. If the dollar can be lower, it probably starts in the wheat. And wheat really led us higher early on. Chicago pulled back a little bit during the day. I was a little disappointed from the highs. Minneapolis held in there really well, considering all the rains we've gotten in the Dakotas here lately to help the spring wheat crop.
So let's talk about the technical objectives here in the corn market that we have to get above. I mean, we made new lows last week in December corn, new lows for the year anyways. And we've got to get back above what levels in July and in the December contracts to keep this market going. Because I think 450, at least on the July, is kind of a psychological area, isn't it?
That was right where I was going to start. 450 is a psychological number for me. That should not be a problem, Michelle. I mean, when I think of this time of year, and now the funds being short the market, it doesn't feel like we have any weather premium. Actually, when I think of like D-scoring at 441, I didn't think we had any weather premium at 460, Michelle. So when we talk about the USDA reports here lately and their ending stock numbers, I feel like we should be sharply higher. I'm not quite totally sure why the trade this time is saying that we can just ignore the USDA reports and they don't mean anything, because for the past 20 years, I've been taught you have to trade the USDA numbers. Those numbers, our ending stocks are still very tight. World stocks very tight. I mean, I still think there's a very good chance we see $5 D's corn yet with any sort of little weather scare.
Right. And you mentioned the strong demand, which showed up on the report. Export inspections were very strong again on corn this morning, weren't they?
I know that's the one thing good about kind of being a corn bull myself is I'm like, just go ahead and keep the market down here for a while with the US dollar lower too. We're just going to see this demand increase more and more. It is rather surprising, the bear spread action, you could say, but the July D's corn spread, I thought that thing was going to go to 40 cents plus pretty easy because of the tight old crop stocks. And instead we're down to like 5 or 6 cents again today here. The only thing I can really assume is that maybe last year's crop size was bigger than anticipated. Maybe that yield is still above 180, but that USDA won't correct until probably September or October.
Yeah. So one thing that really pressed both the wheat and the corn market, at least early last week, was weather. And so how hard is it going to be to overcome the favorable weather, especially when you have rains that have now fallen in the very dry areas of the Western Corn Belt?
Yeah, I guess I could say the little farmer thing. You're only 2 weeks away from a drought, but right now it feels like it's a long ways away. We're pretty wet here in the Western Corn Belt right now. Things look borderline perfect. We've still got about 5 days of planting of beans to get done here, so I wish it would just dry up so we could go. But before last week, we were very dry. So you're right. This market, I really felt like today was just in a go nowhere type trade, and we're too low of a overall price for corn, soybeans, and wheat to really drive it lower for the bears to gain any more control. But you're right, we have no bullish story to make it run higher. So wait a few days, I guess. We're going to need a different story to really push this market higher.
And soybeans and soybean oil trying to recover here today after that RVO rumor just whacked the soybean oil market last week. Can we continue to build on this, do you think? Or do we need confirmation of those RVO levels being higher?
Sadly, I don't know if we'll get confirmation. All there are is rumors floating around right now. And that was really frustrating last week because this market closed the day before looking very strong, maybe a bit overbought in soybeans. And maybe that was part of the hard correction. But all these rumors, I just kept thinking like, well, when they sat down with the oil industry, they came up with better numbers than this. So I don't think we'll get any confirmation, any numbers, but I think the market will start grinding back up anyway, Michelle. I mean, soybeans really can't lose acres. I mean, we'll see in the crop progress report this afternoon, but remember, I know I've heard up here that the corn sales were just phenomenal. Seed salesmen very happy with how much corn they pushed out to shed. So I think soybeans need to rally to make sure every acre gets planted at the end of soybeans and not too much corn.
And 295 million bushel new crop ending stocks, whether you believe it or not, that's a low number.
That is a very low number, and I'm glad you said whether you believe it or not, Michelle, because I've been kind of frustrated here. I thought our May report was pretty bullish myself.
I did
295
too.
million is a low number. And for the past 20 years of trading, all I've been taught and learned is that you have to trade the USA numbers even if you don't agree with them. So that's usually my mentality. And I thought now we're going to run higher with soybeans here because we need to get to $11. And no, everyone's talking about the export number being too high. And I just mentioned, maybe last year's corn crop is larger than anticipated, but we're not supposed to be able to do that. We can't trade our own numbers. We're supposed to trade the USDA reports. So I've been a little frustrated. Those numbers are very bullish. I guess maybe what happens is we stay lower for a little while longer. Demand increases, we export some more. And then when we do have a weather scare, and I do think we will have one, I don't think we can go 2 years without having one. This market maybe could have a pretty good move to the upside when we look at the numbers and realize it's pretty tight.
Yeah, and we started off the week with at least China and the US easing tariffs, and that didn't seem to even have momentum through the entire week. So
No.
3 ways I was discouraged about that market, but we did hold support that we needed to on both beans and bean oil. Like beans, the 200 days still intact, isn't it?
Yeah, it is. And that's good. And when I look at like July soybeans, I'm looking at like a 50% retracement back up to 1103, which is also an old resistance point at like 1105. So obviously we're at 1050 right now. That's kind of my target for this market to come back to. Like you said, sometimes you just got to hold the lows. In a day like today, when it's raining outside and you see green on the screen, on the radar screen in Chicago, it's just good to see any green, really.
You are so right about that. Okay, let's talk about the cattle market. Certainly a lot of people talking about maybe last week being a blow off top. 2 up days here. Do we need 3? And where do we need to close to kind of negate maybe that weekly reversal that we put in?
Well, ultimately, I feel like you have to go back up and take out the highs if you're a bull market. So,
Right.
but that's a ways off, Michelle. I don't know. One minute I think that was the blow off top, and we're going to start a new downward trend. But I mean, we've had key reversals I think 3 times in this rally up. So I'm just going to go with saying we got to take out the highs eventually if this market's going to be bullish. And I don't think we can do that this week, Michelle. But I don't know. I mean, when we back up, the selling that I saw last week didn't look like the funds. It felt like the old school packer in the industry selling the board to try to get lower cash, and that didn't work, did it? Cash market stayed very strong. I think it was record high around 229. So I mean, if cash is higher this week, the board should be too. But I'm nervous. That definitely does look like a topping type action. And when you think of the seasonal tendencies, we should be close to a top this time of year. But demand is so strong, and I really don't think that goes away. So like a typical broker, I'm giving you both sides and saying I don't know in the end.
Yeah. Choice boxes above 350 kind of speaks to your demand is still there argument. So, if we have cash trade higher again this week, hopefully the futures will respond.
Hopefully, but let me back up. I don't know if cash will be higher this week. I remember
Okay,
next week.
that was where I was going to go next with you.
Yep, next week's a holiday. That means a shortened kill week. But back to the whole kill thing, I mean, they're just not killing a lot of cattle right now anyway. Slaughter was up a little bit last week, but not much. We're still at very shortened kills. So I don't know what the packer will do next week. If it'll be an extra day holiday to try to get caught up. But there's also a little bit in some talk that the calves are starting to show up now. They're going to have more cattle to pick from. I think, the last month, Michelle, the cattle just haven't been out there. So they shortened the kill speed so much and then had to raise cash. Which is odd, right? That usually works the other way. That, it's just that created this bullish top we made in the market. And, a lot of times last week, I hate to say it, but sometimes these markets top when the news is the most bullish. And it was really bullish last week.
It was, but let's hope everybody got hedged up at those really high levels, right?
Well, it's a problem with hedging. A lot of us started from about 270 up on feeder capital. And I thought I was being really smart by saying hold off till then. So there's a lot of guys hedging. If you're not hedged, my goodness, get hedged. You're right.
And we'll actually wrap up here on the hogs. We did see some bear spreading today. Did the June board just get too far ahead of this cash trade, do you think, or did we run up in a chart resistance there?
No, I think you were right. I think the June contract got too far ahead of cash. if June's going to be at like 103, you really need cutouts to get to that 110, 113, and we're nowhere near that. I mean, we were higher today. That's nice, but I think that's what happened today. That's why you saw the June contract down more than the deferred contracts. It just had to pull back to meet a little closer to cash.
Okay, thanks so much, DuWayne Bosse with Bolt Marketing. That is Markets Now.